Have you ever seen a brand new, incredibly expensive pickup truck and wondered how normal people can possibly afford it? The person driving that gleaming monster probably makes less money than you do, yet pays an absolutely massive monthly bill. Welcome to Pete Invests, where we explore the fascinating financial traps that keep everyday Americans completely broke and endlessly stressed. Today, we are exposing the modern mystery behind astronomical car payments that completely defy all basic logic and simple mathematics. The average new car payment in America has recently crossed into a territory that experts consider to be absolutely insane. We are talking about monthly auto payments that easily exceed what many normal working people currently pay for apartment rent. Millions of average Americans sign on the dotted line every single month for vehicles costing more than median household incomes. These drivers are not secret millionaires, crypto billionaires, or trust fund babies hiding massive amounts of unlimited generational family wealth. They are teachers, nurses, mechanics, retail workers, and everyday office employees who somehow found a way to make numbers work. The shocking truth is that there is an entire financial system perfectly designed to make impossible monthly payments seem possible. Understanding how this predatory system operates will protect you from financial decisions that could completely derail your entire economic future. Let us start with the numbers, because when people hear these average car payments, they usually assume I am joking. The average new car payment has rapidly climbed to well over $700 every month for standard basic vehicles. This gets dramatically worse when you look at trucks and SUVs, which are now the default choice for American buyers. Monthly truck payments routinely exceed $900, and seeing payments over $1,200 is incredibly common right now. Paying $1,200 every single month for 8 years totals more than $80,000 over the entire loan. That massive number does not even factor in the absolutely crippling costs of vehicle insurance, regular maintenance, and expensive fuel. You might think people are making much more money today, allowing them to easily support these massive luxury vehicle payments. Unfortunately, median household incomes have not increased nearly enough to justify these payment amounts using any traditional financial planning wisdom. How are people actually doing it? The answer lies in terrible factors negatively changing how Americans approach the buying process. First, let's talk about loan terms. Remember when a standard car loan was only 3 or 4 total years? Those short terms are dead. Today, predatory auto loans routinely stretch 6, 7, or even 8 years into the future. Some desperate lenders are even offering 10-year car loans, which honestly sounds exactly like a nightmare from horror movies. The dangerous appeal is incredibly obvious. Spreading a $60,000 truck payment over 8 years drops monthly bills significantly. A $1,500 monthly payment over 4 years suddenly becomes a seemingly manageable $900 over 8 years. The lower monthly number looks completely reasonable, which is exactly the only detail the distracted buyer focuses on during negotiations. By extending the loan term, buyers dramatically increase the absolute total amount they will eventually pay for that depreciating vehicle. That $900 payment over 8 years magically adds up to over $86,000 leaving your pocket. Taking a 4-year loan costs $72,000, making the longer term a $14,000 financial mistake. Drivers keep making incredibly expensive monthly payments on these trucks long after they lose all their original market resale value. Because cars depreciate rapidly, owners become trapped in negative equity, owing significantly more money than the vehicle is actually worth. They are completely unable to sell or trade the vehicle without writing a massive check to cover the remaining difference. Extended loan terms are just the start. The second trap is the deceptive rise of 0% promotional interest rates. Dealerships boldly advertise free money to buy new trucks, but the true cost of financing is secretly built into prices. You are either paying full price with 0% financing or getting a discount while paying standard market interest rates. Only extremely wealthy buyers who can pay cash easily qualify for these highly advertised 0% promotional financing interest rates. Then there is the dangerous trade-in game. A buyer gets a 7-year loan but wants something newer sooner. They still owe more than the car is worth, so they roll negative equity into an even bigger fresh loan. This brutal cycle keeps people constantly paying for cars they no longer own while taking on massive debt for upgrades. Loan balances aggressively grow every single month. It is a terrifying financial hamster wheel where running faster puts you behind. Dealers absolutely love this toxic arrangement because trapping someone in negative equity instantly creates a desperate captive customer for life. The most concerning trend is how normalized these extreme payments are. Spending $1,200 on coffee sparks immediate interventions. However, when someone spends that exact same amount on a depreciating car, society just nods and calls it reliable transportation. This sick normalization results from decades of manipulative marketing convincing vulnerable Americans their vehicle equals their identity and social status. Truck commercials successfully sell the compelling fantasy of climbing rugged mountains, even if you only ever park on flat grass. Emotional manipulation makes it incredibly easy for regular people to eagerly justify expensive payments that are completely and totally irrational. When buying an identity, a $900 monthly payment suddenly feels like an investment rather than sheer financial suicide. To survive these massive payments, people dangerously restructure their entire financial lives, treating truck loans like a massive monthly mortgage. Buyers move into tiny apartments, eat cheap ramen noodles, and skip important vacations just to afford their expensive dream truck. Some take exhausting second jobs delivering food on weekends, using their wildly expensive truck simply to essentially pay for itself. Others actively destroy their futures by raiding retirement accounts and taking early withdrawals to cover endless vehicle down payments today. Sacrificing hundreds of thousands in potential future wealth for a depreciating physical asset is a mathematically disastrous and heartbreaking choice. Desperate owners also use high-interest credit cards for maintenance, repairs, and fuel to free up cash for car loans. This terrifying credit card shuffle is exactly like using a dangerous fiery blowtorch just to light a tiny, simple cigarette. Tragically, many consumers leverage their homes through dangerous equity loans to quickly buy cars, fundamentally misunderstanding how appreciating assets work. Your house should quietly build long-term wealth, while your car should merely provide highly efficient point A transportation daily. The insanity multiplies because the average American household incredibly now owns more expensive vehicles than legally licensed drivers living inside. Families easily juggle 3 simultaneous car loans, desperately hemorrhaging thousands of dollars monthly managing worthless, rapidly depreciating metal driveway inventory. People focus so intensely on monthly loan affordability that they completely ignore the massive insurance premiums required for expensive vehicles. Insuring a $60,000 truck easily costs over $200 monthly, completely destroying the family monthly budget instantly. Maintenance presents another massive financial shock. Modern trucks feature sophisticated technology and premium components that demand incredibly expensive repair bills. A simple brake job can cost $1,200, and major transmission problems can easily wipe out $5,000. Since most owners absolutely lack emergency funds, sudden, inevitable vehicle repairs force them into an inescapable, brutal, vicious debt spiral. These massive, fuel-thirsty trucks barely get 15 miles per gallon, ensuring monthly gas bills easily exceed $400. When combining the loan, expensive insurance, endless fuel, and routine maintenance, owners easily spend over $130,000. After 7 hard years of endless payments, that exact same highly expensive truck will be worth only $15,000. That is absolutely not smart transportation financing. It is nothing but pure, unadulterated wealth destruction, featuring cup holders and heaters. If that $800 payment were cleverly invested in a basic index fund, it becomes $70,000 instead. Consumers tragically develop automotive Stockholm syndrome, fiercely defending their poor financial decisions because the vehicle represents perceived social class success. Suggesting a highly reliable used car feels like a direct offensive attack on their personal self-worth and hard work. The greedy automotive industry expertly weaponizes this exact fragile human psychology to smoothly convert deep emotional insecurities into binding signatures. Dealerships completely ignore massive opportunity costs, entirely focusing the overwhelmed buyer on instant gratification and highly deceptive low monthly payments. If you worry about high payments, they extend the term. If you fear depreciation, they push another awful trade-in. The mystery of affording insane car payments is simply a carefully orchestrated system of extended loans and deliberate emotional manipulation. People are absolutely not actually affording these vehicles. They violently destroy futures while continuously convincing themselves they deserve shiny trucks. The next time you see someone driving a ridiculous truck, remember they are likely eating cheap, dry cereal to survive. Making truly smart financial choices perfectly requires completely ignoring the flashy social status game and strictly prioritizing long-term freedom. Keep your older, highly reliable used car, passively invest your hard-earned money instead, and completely avoid this financial trap. Thank you so much for watching this video. Please kindly like this video and subscribe to the Pete Invests channel. Please do not forget to turn on the notification bell so you never miss another highly important personal finance lesson. Thanks for watching, and we will see you on our next video.